In this video, we are going to talk about 12 Dividend Aristocrat stocks to earn income all year long. So before starting this video, please like this video and subscribe to this channel for our future updates. Stocks with a long history of annual dividend increases provide investors with a sense of security. Shareholders can almost guarantee that their profits will continue and increase year after year. Income investors can expand this sense of protection on a month-to-month basis with a little imagination. Dividends are paid out every 3 months in several dividend-paying stocks. However, if all of your dividend stocks pay out at the same time, such as in March, June, September, and December, your income stream will dry up in the months between. This is especially difficult for retirees who depend on a steady stream of cash to cover their monthly expenses. Fortunately, the pay dates for some of the market's most dependable dividend stocks are dispersed throughout the year. Whether you're pulling in a paycheck or living off investments, dividends can be a great way to reel in some cash. But investors usually have to wait months between payments. Many companies dole out dividends in March, June, September, and December. If all your payments land in that timetable, your income stream can dry up for long stretches. To keep the cash flowing, we assembled a bundle of 12 stocks that pays dividends every month, generating income like a steady paycheck. We focused on firms with steady businesses, sturdy balance sheets, and a commitment to uphold their payouts. Not all the stocks boast fat yields. But our lower-yielding picks feature strong profit potential, along with room to hike their dividends. A portfolio of equal stakes in each stock would yield 3.3%. That beats the 2.1% yield of Standard & Poor's 500 stock index and the 1.5% yield of 10-year Treasury bonds. Stocks can fall far more than bonds, of course. But if you stick with this lineup, the payments should roll in. Most of these firms should increase their dividends each year, too. Number 1. January. Walmart stores. The world's largest retailer is working hard to catch up to Amazon.com, and it's making strides. In 2016, Walmart went on a buying spree, acquiring up-and-coming online stores including Jet.com, Shoebuy.com, and Moosejaw.com. In a sense, the savings are already paying off. Walmart's online revenue in the United States increased by 60% in the second quarter, thanks to new assets. For the first half of the year, the corporation paid out $3.1 billion in dividends. Number 2. February. AT&T. When it comes to dividends, telecommunication stocks are hard to top. Customers, like utility providers, pay for service on a monthly basis. This indicates that the firm has a steady flow of cash to distribute to shareholders. For more than 3 decades, AT&T has been able to increase its dividend every year using this simple formula. It consistently has one of the highest dividend yields among the S&P 500's 417 dividend-paying stocks. Number 3. March. Exxonmobil. Exxonmobil has a tangled history. The mega merger of Exxon and Mobil in 1998 gave birth to it. Both companies were descendants of Standard Oil, which was split up in the early 20th century by John D. Rockefeller. It now holds the distinction of being the single largest corporation among the 50 dividend aristocrats. And it has never let shareholders down when it comes to dividends. It has paid a dividend every year since 1882, considering the low oil prices of recent years. It's no surprise that Exxon ranks as the best-performing stock of all time, given the enormous wealth it has produced for its shareholders over the years. Number 4. April. Medtronic. Medtronic, the world's largest standalone manufacturer of medical instruments, offers a wide range of health-related products. You're likely to come across any of the company's products, which range from insulin pumps for diabetics to stents used by heart surgeons, if you go to any medical care provider. The company is also committed to providing shareholders with a daily and safe dose of cash. Since 1978, Medtronic has increased its dividend every year. Number 5. May. Procter Gamble. Procter Gamble has prioritized the dividend across thick and thin. Since 1891, regardless of economic downturns or wars, this classic protective stock has paid one dividend. It has also increased its dividend every year for the past 60 years. The key is that it focuses on what people purchase, regardless of whether the economy is doing well or not. This consumer goods behemoth produces items that people can't do without, such as Crest toothpaste, Charmin toilet paper, and Love's diapers. Number 6. June. Johnson & Johnson. The vast operations of this healthcare behemoth include everything from pharmaceuticals and medical equipment to well-known consumer products like Band-Aids and Listerine. Over the course of its long existence, this diversity has served it well. Johnson & Johnson has been a public corporation since 1944, having been established in 1886. Another historically defensive industry, healthcare, has helped J&J increase its dividend every year for more than half a century. Number 7. July. Ecolab. Ecolab, like Exxon or Chevron, has been a longtime oil and gas industry mainstay, providing consistent and growing dividends. Ecolab, on the other hand, as a supplier of water treatment and other industrial-scale maintenance facilities for energy firms, must keep an eye on oil prices. Oil prices, according to Kiplinger, will remain relatively steady in 2021, finishing the year between $40 and $45 per barrel. Over the last 5 years, shares have more than doubled, comfortably outpacing the wider market. Ecolab has increased its dividend for the 25th year in a row and has paid out cash to shareholders for the 80th year in a row, according to the company. Number 8. August. Abbott Laboratories. Abbott is a much smaller organization than it was only a few years ago. In 2013, the healthcare corporation separated its pharmaceutical business into AbbVie, a publicly traded company. In the Abbott tradition, AbbVie pays consistent dividends. The spin-off was made so that the company could focus on branded generic medications, medical equipment, nutrition, and diagnostics. As a result, it has a diverse brand portfolio. Similac and Pedialyte for infants are perhaps the most well-known items by consumers. The company's diversification around the healthcare sector, similar to J&J's, has helped it become a dividend stalwart. The company began paying dividends in 1924 and has increased them every year for nearly half a century. Number 9. September. Chevron. The energy industry's generous dividends come with a risk, as investors in oil and gas companies like Chevron know. The fortunes of these businesses are linked to the price of crude oil. That's why Kiplinger predicts a relatively steady price per barrel by the end of 2021, settling between $40 and $45 per barrel. Regardless of the future price of oil, investors can rest easy knowing that Chevron can maintain its dividend in good times and bad. For more than 3 decades, the oil behemoth has increased its dividend payout every year. Number 10. October. Illinois Tool Works. Illinois Tool Works is a major manufacturer of heavy machinery. Construction materials, automobile parts, restaurant equipment, and other products are among the company's offerings. As a result, it is susceptible to economic cycles. Throughout the ongoing economic boom, this has been a positive thing. Over the last 5 years, the stock has outperformed the S&P 500 by nearly 70%. Since 1964, Illinois Tool Works, which was established in 1912, has increased its dividend every year. Number 11. November. Lowe's. Lowe's may be the country's second largest home improvement retailer, but it outperforms larger competitor Home Depot when it comes to dividend increases. For more than half a century, the organization has raised its dividend every year. Home Depot has been increasing its dividend every year since 2009. Lowe's has benefited from the housing market's long recovery, but the prospect of higher interest rates has some investors concerned. Whatever happens, they should be assured that the dividend has always been a top priority for management. Number 12. December. Valero Energy. The world's largest independent refiner, Valero produces gasoline, ethanol and other products. With more than half of its production capacity located along the Gulf Coast, Valero has access to a variety of imported and domestic raw materials, such as heavy crude oil and natural gas, at low prices. It's also in a good position to ship refined goods to Latin America, where demand is growing at a healthy clip. Those advantages have helped make Valero one of the lower cost and more profitable refiners. It is also conservatively managed, carrying just a modest amount of debt. With the industry now mired in a downturn, Valero's profits have tumbled. But even with earnings expected to slide 65% this year, to $3.24 per share, Valero should rake in more than enough cash to cover its dividend. Analysts see earnings per share rebounding 60% in 2017. If that doesn't pan out and the stock stays flat, investors should still be able to scoop up a 4.6% yield. What do you think about our video? Was above information helpful? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.